race is on to become the next Tesla. Tens of billions of dollars are riding on the outcome. Investors from all over are betting that a field of electric car startups can emulate the rise of Elon Musk and Tesla, who are on track to sell 500,000 vehicles this year and turn their first ever annual profit. But more impressive than that is that Tesla is scheduled to join the S&P 500 next month and is now more valuable than Toyota, Volkswagen, GM, and Ford combined. Of course, that raises some eyebrows, but it also opens the door for competition and disruption. So while Tesla looks to solidify its lead, the startups looking to challenge its throne will in turn face numerous obstacles. Most haven't successfully built or sold a car, and those that have struggled to do so profitably. But what unifies the entire EV industry is a number of unanswered questions. Are consumers ready to buy a pricey electric vehicle, especially one other than a Tesla? There's also a number of questions in manufacturing, such as if it's smarter to build your own vehicles in your own factory, or should you let outside contractors produce them? Does it make sense to outsource production or keep it close to home? And let us not forget that the legacy automotive industry isn't standing around waiting to be disrupted. They're making their own plays. GM, for example, said that they would spend $27 billion through 2025 on the development of electric and driverless vehicles. So really, the big question here is the future of transportation and who gets to define it. But as it relates to today, I think we should do a summary of some of the major players out there that you should be following, should be looking for updates from, or completely avoiding. So let's spend this video looking at some of the other companies and startups that are looking to disrupt Tesla or beat them to market with some solution. But before we get to that, let's quickly talk about the 10X Tribe, because this will really help you up your game. You see, the 10X Tribe is a free community that we run, all about helping you take your trading, your mindset, your opportunities, and the profits you make go to 10X and beyond. It's free to join, super easy to sign up, and gets you access to free guides, courses, portfolios, our trade of the day, lots of other tools and resources and webinars that we're a part of, as well as a community to help you grow. And what's really exciting is that we're having a huge sale right now because we want to help you get prepared for 2021. We believe in education before profit, and by selling our best courses at a discount, we think we can help you make 2021 your best year ever. So if that's at all interesting, check out the link below, join the 10X Tribe, consider some of our courses, and if this is the first time in the channel, definitely don't forget to subscribe as well, because we're constantly putting out updates and we're constantly sharing awesome opportunities for you to be a part of, as well as sharing education on how to make the most of them. So now let's dig into some of the competitors to Tesla, what they're doing well, what they're not doing well, and why you might want to consider them for investment. So the first competitor is Rivian Automotive, which is a really exciting one. It's generated a lot of hype, and they've been able to raise $5.3 billion, all in pursuit of production of their first model, the R1T, an all-electric pickup, which will start around $76,500 before tax incentives, and it goes on sale in June 2021. What I think is exciting about Rivian is that they're selling electric pickups and SUVs and really targeting buyers with an outdoorsy, off-roading kind of brand. And it's clear that their pickup truck, the R1T, is a lot more rooted in traditional pickup truck design. It's not that much different from the stuff already out there. So for those who prefer a pickup truck, it's not as much of a shift visually as something like a Cybertruck would be. They also have a contract to build 100,000 electric delivery vans for investor Amazon, and to save some money, they're retooling a former Mitsubishi factory in Illinois. So there's a lot to like here, but some of the reasons you may want to consider giving Rivian a pause is that Rivian intends to emulate Tesla's model and sell directly to consumers. But as Tesla has shown over and over again, this is very complicated because state franchise laws often prohibit or at least obstruct these practices in order to protect the traditional dealership model. Rivian also intends to break into some of the toughest markets. Pickup trucks, SUVs, these are some of the most popular models on the road, but don't mistake that for being an automatic easy sell. These are fiercely competitive with brand loyal customers, and that's why Tesla went with something so radical like the Cybertruck in order to stand out from a very crowded market. Rivian bringing something a little bit more traditional to the market obviously helps with less friction in terms of adoption and acceptance, but in the same time, they have a harder time standing out. So it's both a benefit and a negative. But that being said, Rivian is still one of the most exciting EV companies out there, and unfortunately the ownership is private, but I wouldn't be surprised if they approach an IPO sometime in the future. So the next company is Lucid Motors, which is also private and has raised about $1 billion so far. And what makes them significant is that their first model, the Lucid Air, well, it's an EV luxury sedan, and the company says it'll be able to drive more than 500 miles on a single charge in some configurations. The first Airs will cost $169,000 before tax incentives when it goes on sale early next year, with less costly versions to follow. Expect an entry-level model to start around $77,400. So what's the like here is that Lucid is building a factory in Arizona and aiming at the high-end luxury market. The thinking here is that they're going to go after not only Tesla, but Mercedes-Benz and BMW, who are also bringing to market their own fully electric models. They're backing all this up with their proprietary battery and motor technology, which they say enables sports car-like performance and the ability to drive farther without charging, as well as having roomier cabins in a smaller car. But of course, what's not the like here is that they've been having problems raising money and really getting to market since introducing their concept car in 2016. And during that time, other high-end auto manufacturers such as BMW, Mercedes-Benz, and Porsche have been rolling out their own luxury electric cars, so the opportunity for Lucid is slowly closing, and it remains to be seen if they'll be able to penetrate this very exclusive market. Now, next up, I want to talk about Lordstown Motors, which is a very exciting one. This is a public company, and it's valued at $4.2 billion as of November 19th, and what they intend to do is bring a battery electric pickup truck, the Endurance, be one of the first to market with an EV semi marketed to commercial fleet operators with a starting price of $52,500 before federal tax incentives. So immediately what's the like is that the use case for electric semi-trucks is very clear. So being first to market is obviously a huge advantage if they can manage it. Lordstown Motors took over a former GM assembly plant in Ohio, and they aim to start production in September 2021. However, what should give investors pause is that Lordstown Motors have said that they need to hire more than 1,000 workers to retool the massive plant before entering an increasingly crowded electric truck market. It remains to be seen if they can actually go to market with a production-ready vehicle that outcompetes or at least stands out amongst their competition. But that being said, I think the opportunity is very clear, and Lordstown Motors has done a very good job of communicating what it is they intend to do and when they intend to do it. And so the next company to talk about is Fisker, which is also public and valued at $4.7 billion. Their first model, the Ocean, is a compact SUV made with sustainable materials and is slated to begin production in 2022. The price starts at $37,500 before tax incentives. And what's interesting is that much of Fisker's manufacturing and engineering will be contracted to outside vendors. Fisker is also developing a flexible lease model that functions more like a monthly subscription. Customers will have the ability to terminate at any point, and the company can then release the car, and creating recurring revenue. And of course, the brains behind Fisker, Heinrich Fisker, this isn't his first attempt to get an electric car startup off the ground. In 2007, he founded another company, Fisker Automotive, an early rival to Tesla that eventually went bankrupt. And of course, his latest venture isn't without stumbles. For example, they promised a battery technology breakthrough before eventually ditching the effort, saying that it couldn't be commercialized. Their manufacturing approach may be risky as well, and other companies have struggled with the monthly subscription plans for vehicles model. So it remains to be seen if Fisker can really knock it out of the park and be a Tesla competitor this time around. And so the next company I want to talk about is Canoe, and they're pursuing a SPAC IPO under the ticker HCAC with a valuation of $2.4 billion, and they're expected to complete their IPO by the end of the year. Now, what's interesting is that their first model is a microbus-like all-electric lifestyle vehicle that the company describes as a loft on wheels, and it will be called the Canoe. Pricing hasn't been revealed just yet, but it's set to hit the road in 2022. But all that said, I don't think that Canoe's focus, or what we should be focusing on, is around their production model. Instead, what's really interesting is Canoe's technology. They intend to integrate the batteries, the chassis, and the motors and steering components all into one easily replicatable template called the skateboard. The skateboard makes up all the major components of the EV, and from that you can plop on any model or chassis that you would like, which drastically changes the relationship and the fundamentals of car manufacturing to the end consumer. From one skateboard body, you're able to produce a whole fleet of different vehicle models. I think that's something really exciting. And what's also interesting is that they're another one of these companies that are looking to do a lifestyle subscription service, meaning that customers will be more leasing or renting these vehicles rather than pure ownership. And so with Canoe, I think there's a lot of good ideas on display, but of course they're trying a lot of new things that have inherently a lot of risk behind them. And underscoring all of that is the fact that they haven't yet locked in a deal with a manufacturer in order to build their first vehicles. So lots of really good ideas here, but they need to be able to execute on them as well. And so the next company I want to talk about is NIO. This is another public company and it's valued at a massive $66 billion. And what really sets NIO apart is the fact that it is a Chinese EV company, very much akin to the drive and ambition of Tesla. Their main model is the ES6, which is a 5-seat SUV with a starting price of roughly $52,000. And what's really been interesting is how NIO's stock gains have outpaced Tesla's share price in the recent surge that we've seen, as well as having a market value that eclipsed all of the big companies in Detroit as the EV market just explodes. So what's notable is that they're already to market, they're already making and selling cars, and their sales are rapidly growing. And they've also started a subscription model for their batteries, which will allow users to buy cars without batteries at a lower price and then swap them out for a monthly fee based on their energy needs. And it's all really interesting, but what should give us pause is that despite a strong 2020, NIO's future seemed a lot more in doubt last year. In 2019, they posted a net loss of $1.6 billion and laid off roughly a fifth of their employees. But they've been able to turn it around with a massive loan from Chinese state investors this past spring. But they will really need to boost sales and margins in order to remain competitive with Tesla, which of course just opened its first Chinese factory last year. And so another Chinese EV company we should pay attention to is Liado, which is also public and valued at $30 billion. Their main model, the Li 1, is a plug-in hybrid luxury SUV. It uses a small gasoline engine to generate power for a lithium-ion battery, and it lists for about $49,500. What excites me is that Liado can appeal to drivers in some parts of China where the charging stations are not as plentiful, while still qualifying for the state subsidies. Liados require smaller and cheaper battery packs, which helps the company save on cost. But what gives me pause is that while Li is focused on hybrids, and that helps alleviate drivers' concerns about charging in the short term, well, they're going to lose ground and need to play catch-up in the long term if they want to be part of the all-electric future. So the last Chinese company I want to talk about is Xpeng, which is public and valued at $35 billion. And it's all centered around their main model, the P7, which is a battery electric sedan, starting at $37,000. What's really exciting here is that Xpeng makes SUVs and sedans that undercut Tesla's Chinese models on price. They're also developing their own autonomous driving software and have an in-car operating system with its own network of apps. What's also something of note is that they have a big backer in the form of Alibaba. But what should give us pause is that the Chinese government has helped stimulate electric car demand with subsidies that are expected to be fully phased out by 2022. Because Xpeng is software focused, they could be hindered by further deterioration of the US-China relationship. And so finally, the last company I want to talk about is Arrival, which is making big waves today. They just announced that they're going public through a SPAC IPO under the ticker CIIC for now, but when they go public, they'll be under the ticker ARVL, and at this time, they're valued at $5.4 billion. Now, what's important to note is that this is a UK-based EV company, and they're going after commercial pursuits. Their first model is going to be an electric passenger bus, expected in the fourth quarter of 2021. Basically, Arrival plans to build an electric bus for urban transit or delivery vans at smaller, automation-intensive assembly plants the company calls microfactories. The factories, they say, can be built for tens of millions of dollars, far less than a conventional assembly plant. They've also secured an order from UPS for 10,000 vans. So this is obviously very exciting because there's obviously a massive opportunity for the commercial markets that EVs will soon be able to penetrate in, if not dominate. However, at the present, many of the prospective customers, cities and transit authorities, well, they're in big fiscal trouble due to the pandemic and dropping urban transportation ridership. Arrival also faces a strong set of existing competitors due to widespread acceptance of electric buses in certain parts of the world. In China, for example, many of the new buses that are sold are already electric. So Arrival is dealing with a more competitive market than it may seem. But it's still primed for opportunity and definitely one of the most exciting stocks to be talking about right now. And so with that, we've covered a lot of the major, most exciting EV companies out there. ones you should be aware of, and hopefully it's given you a sense as to where the EV market is going and developing as well. I think this is an extremely exciting time to be envisioning what the EV market can do, where it can go, who will be the big players, and how things will change in order to support it. And to that end, I would love to hear your comments about what you think about the EV market, what plays you're making in it, and what you think will be the next Tesla. I'd love to hear it in the comments below, and don't forget to join us over at the 10X Tribe by following the link in the bio below. Come be a part of the discussion, come join our free courses and discussions, and don't forget that we're having a massive sale right now, only until the end of the week, for some of our best courses, so don't miss it. Make sure that your 2021 is even more profitable than this year. Until the next one, thanks so much for watching. Take care right there. Cheers.